Hi traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. It's been a pretty slow day thus far. It's been a day of consolidation and day of consolidation, a day of retracement of some of the moves that we've seen. I have to completely agree with Paul. I think the market's more or less at this point stunned. When you take these types of moves, and I'm just going to go over to the Dow futures really quick, and then just so you can see the daily charts, and daily candles. When you take these types of moves over the course of the last couple of days, where you have this massive sell-off, massive rally, massive sell-off, this type of price action is really, it probably wore out the market quite a bit to where, you've got most participants standing back, taking a step back, saying, okay, I just got finished getting whipped around like crazy. I don't know what I'm going to do right now, and I don't know what my next move is. And when all market participants are a little stunned, that's what happens. You get the market that just kind of stalls, and that's what's happening right now. We're looking for some further direction. Unfortunately, today we don't have a lot of data that's it's trend changing, if you will. I mean, you've got we got import prices, we got crude oil inventories, and that's it. So we got New Zealand GDP a little bit later, but other than that, it's damn slow. So it's a situation where the market's probably going to continue to consolidate here. I think everybody, and I'll say this, everybody, at least me, we're all watching bonds, and the bond market is in pretty big, in my opinion, pullback mode. And if you look at, like, let's go out to a weekly chart of like the 10-year. When you look at the 10-year, and this just so everybody is clear here, the bond market has been rallying pretty significantly for many years. I mean, ever since I've been in the market. One of the most successful people that I know in the markets is a bond broker. Okay, he is he's a senior vice president at Morgan Stanley. He's been in the business maybe about another 5 years longer than myself, and basically he's been managing bond portfolios for 30 years, for 25 years, almost 30 years. I think he's been in the business a little bit, like 26, 27 years. Super successful guy that's just been buying bonds, and that's all he's done his whole entire career, literally. And he manages a massive bond portfolio of a lot of executives. He raised money for Beats by Dre, the headphones that sold to Apple. He managed Dr. Dre's money way back when. I mean, like, I'm talking for the last 20 years. The only thing and I haven't talked to him in, like, I think I've talked to him. I think the last time I talked to him was maybe about 7 or 8 months ago. And he lives just north of San Diego. Has this huge home on a big winery, right above a winery in northern San Diego. And he's last time I talked to him, he's like, yeah, I'm still just buying bonds, Blake, just still buying bonds, because I talked to him about when Beats got bought out, by Apple, how he did, and congratulated him and everything else. And yeah, it's just he's been riding this wave for a long time. And a lot of people speculate that this bond market may be over. And the one thing that I have to say before I get into the morning analysis is simply this: I don't know if yields are going to go much lower globally. If you would have met me and you would have been listening to this analysis 3 years ago, do you know what I used to say 3 years ago to everybody here? Rates are going to ZERP across the globe. This is before they did. 3 years ago, I'm like, look, everybody's rates are going to zero. Everybody's. What I didn't anticipate at this point in time is that rates would go to negative in a lot of different countries. Okay? Rick said, you did. I couldn't answer fast enough. Yeah. I mean, and I always said that Aussie and New Zealand, the rates are going to be about 2%, because that's for Australia and New Zealand, rates at 2% is nominally zero. Okay, so if you look at rates right now, okay, we're basically zero, and by the way, UK has always been a half a point above the US. 0, 0, 0. We were at 0. Canada's basically at 0. They're Australia, New Zealand. You can argue their nominal rates where they're at right now is basically 0. Okay, and I'm going to tell you, I don't think rates are going much lower. I mean, yeah, Japan may dip a little further into negative rates, perhaps they may, but you know, the fact of the matter is rates are probably not going much lower than we're currently at. So therefore, bonds, the market is finally coming to that conclusion. Oh wow, look at crude oil, by the way. Crude's taking a dive. The market's coming to that conclusion that, look, there's nothing more that central banks can do. And we're seeing a sell-off in bonds, and we're seeing a rally in yields. So because of that, it's good. It's bringing turmoil into this market. So you have to be very, very careful about how you're navigating through today's markets when rates are probably going to be going higher from here. I'd venture to guess if we have this conversation a year or two from now, rates are going to be all about 1% higher than where they're at right now. Maybe 2 years. What does that mean? Well, that means bonds are going down and yields are going up. And as yields go up, you gotta start fighting the good fight, because now it's going to be a really difficult and challenging global environment in asset prices as yields rise. Okay? All right. Now, I'm done with that, so let's go ahead and start getting into our morning analysis. All right, so here we are with the euro dollar. Euro dollar. What do you do with that? I think you do a whole lot of nothing. Wouldn't you agree? I mean, if you look at this chart, there's 112. 113's up here. I don't really see, I think 113 is still going to be big resistance. I don't think you do anything right now. Right? You don't do anything. $112, $113. Range. Nothing to do. Pound. Let's go to the pound dollar. What to do with the cable? You know, a lot of people ask, a lot of people said, man, I can't believe the euro didn't move yesterday. We saw this big sell-off in the Aussie and the Kiwi, and the Canadian got smashed, the Mexican peso got destroyed. Why'd that happen? Well, it's because the euro crosses were going higher. That's why. That's why that happened. And I don't think they're done, by the way. So you might see a lot of these European currencies not really move anywhere, where you see the commodity currencies move around. So just keep that in mind. This dollar Canadian's pretty firm too, with crude oil selling off. FYI. All right. So the cable. Now the cable, I can't believe it almost completed a head and shoulder pattern. I wrote it off too, but I think it's. I think what we can do is we can say that support's there right now for today. Support is here at 132.35. Okay. Support. Well, we have the 50% retracement right there. Comes in around 131. 56. I'm going to mark 131.20. That is the head and shoulder completion area. It is in between fibs, but I can see, I mean, I'm sure you guys can imagine this. I can see us plowing the new lows, you know, scaring the crap out of everybody, right? Dollar starts to firm, you know, we crater here, stops out everybody who's long and then bounces, you know what I mean? So I could totally see that. I can totally see that happening. So I'm going to write down 131.20. We are bearish while we're below 135. I know everybody was all, hey, look, how many of you guys, last week, dude, we're at 134. We're going to take out the highs. We're going past 135. Everybody was so bullish. I'm like, dude, well, we're below 136 or 135. You know, you got to be careful being bullish. I'd be very careful up here. And I mean, we're trading a couple handles lower, you know. I have to say again, okay, we are trading and consolidating at like 35-year lows right now. We're consolidating at 35-year lows. It's hard for me to be really bullish and to get really bullish the cable while we're down here. And I own the pound New Zealand. I may only be up like 50, 70 pips right now, but I mean, I actually own some cable. But it's hard for me to get really bullish while we're down here. Okay? It really, really is. All right. Let's go over to the Swissy. So here's the Swissy. By the way, I got to tell you guys something. So last night, my youngest son, he woke up throwing up all over the place. Fortunately, he didn't do it in his bed. We have custom-made bunk beds. They look like little troll holes in the room, and he can crawl through the holes in his room to get into his bed. It's pretty cool. It's custom made for my brother-in-law made him. Fortunately he crawled out of there and started throwing up outside of his bed at like 12:30 at night. So I was awake from like 12:30 to 1:30 cleaning up puke. Anyway, he got sick because he had soccer practice last night, and of course he's starving. We had soccer practice. I forgot my wife made dinner. We were at the grocery store, and we walked by the deli, and he's like, "Oh, Dad, you know, I want to get some chicken. Can I get some chicken?" And I'm like, "Sure, you can get some chicken." So we got him, like, you know, and I actually ate a couple pieces. He ate like, you know, like 3 pieces of chicken tenders, you know, deep fried chicken. Yeah, he threw up last night, so I gave him food poisoning. I ate a couple pieces. And fortunately, I haven't thrown up. That's good. But man, poor little guy. So here, the point of the story is never buy food that's just been sitting out at a grocery store. Never do that. Never do that. Eat fresh food, whatever you do. It's not something I normally do, and it's actually I can probably say I haven't done at least in the last 10 years. At least, if not longer, maybe 15. I don't know. I can't even tell you the last time I can't honestly tell you the last time that I've bought food from a grocery store in, you know, that's just been sitting out, you know, in the heater obviously, but just been sitting out for, you know, who knows how long. Never again. Yes, never again. If I yawn a little bit, that's why. Okay, here's the dollar Swiss. Dollar Swiss. So yesterday we talked about the 618 capping prices. Well, it did. We wrote. I think we wrote 98.20, but I remember us saying, you know, the 618's right here. We need to be mindful of that. Well, guess what? That is proving to be significant resistance. The good news is that we're wedging here. That's the great news. So we have 98.90, 97.90 is resistance. Okay, that's key. And we have this trend line of support that's coming through here. That means that we should be supported at 97.30. They're not great support, but it is support. So we're wedging here, and we might get a little bit of a breakout of this tight range. Sorry. Okay. Let's go over to the yen. Now, the BOJ announced, or not, they didn't announce, sorry, it was from Kyoto News that the BOJ might lower rates to negative 2%. Now, that news that came out surprisingly, or that news story that came out surprisingly, the dollar yen sank. Now it's reversing course. See, if the BOJ, and here's the thing about the yen, I want to talk a little bit about the yen. Let's take our 30-year bonds, okay, and let's take the dollar yen, which, by the way, the dollar yen you'll see is right here, coming up today. There it is. Dollar yen's in blue. Okay, so with and I'm going to be blogging about this a little bit later, so just be advised. So there's your 10-year or your 30-year. There's your dollar yen, and in my opinion, the dollar yen should be breaking higher as yields go up and bonds sink, and if the BOJ continues to put pressure and JGBs continue to sell off despite the rise in yields, I mean, we're going to see the dollar yen pop here. So I wouldn't be surprised to see the dollar yen just go, start ripping here. Notice where oops, that's not what I want to do. Notice what we did today. Notice that we challenged that trend line. See this trend line? Yesterday, if I'm not mistaken, we wrote down resistance at 103.10. We went as high as 103.30, which I'm surprised, but we broke through that resistance and then stopped. Okay, that tells me that this resistance is major, and I'm gonna tell you right now that if we break through 103.36, you can write off the yen. 103.35. That's major now. Okay. Oh, Greg, did I say 98 yesterday? The dollar Swiss? Oh, well, I thought I might have gone higher than that. I thought I did 98.20. Thanks, Greg. So we're in a bearish trend, but we're threatening to go into a range and quite possibly bullish if we break through this 103.36. If we break through that, this dollar yen's going to go berserko. Bonds are going to shoot the bed. They're going to. Sorry, I'm so sorry. PG-13. Earmuffs, kids. Bonds are going to crap the bed, and if bonds crap the bed and stocks fall, this dollar yen's going higher. Okay? All right. I know Paulie doesn't believe that, but look at this hammer that's developing on the hourly. Little doji, could be a hammer. We got 5 minutes. 50% retracement. This is going to be support for today. 102.40 support. Ote? Ote. Look at the dollar Canadian. The dollar Canadian says, yeah, By the way, well, I guess I'll go over the dollar Canadian when I come back. If you're a Forex Analytics subscriber, you already know what I'm gonna, you know where I'm going with this. All right. And You haven't tried Forex Analytics. You should. Why? Because it's $1 for 20 days. That's why. I'll be right back. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I hope everybody's having a great trading session. So we're going to get back into our analysis. We're going to talk about the dollar Canadian. Now, first of all, I want to give credit where credit's due. Chi, in our chat room. Hey, Chi, take a bow. Where are you, Chi? Wait, hold on. Hold on, Chi. Chi right here. Hey, Chi. Good eye, man. All right. That's our chat room, guys. Chi saw a... you guys are all on Jumbotron. Jumbotron. Okay. All right. So, first, sorry. I digress. Okay, so that's the Wise Trade chat room, by the way, if you guys are Wise Trade traders. So she saw I was looking at the head and shoulder pattern on this intraday chart yesterday, right? So I was looking at this yesterday, this one right here. Let me just draw it for you. And we did it while we were on the morning edge, yesterday, 24 hours ago. I bought it just before the morning edge, and then at the end of the morning edge, we sold it right here, or after the morning edge. Okay, sold it. Okay, it was a good move. But what I did not see is the bigger cup and handle pattern. And she noticed, and he goes, "Isn't this a bigger cup and handle pattern?" I'm like, "Oh yeah, it is, isn't it? This is a cup. That's a handle." And where it takes us is that blue line. So where it takes us is about, I don't know, 133.30. Okay. Now that's a pretty big move from here. I don't know if we're going to get there just quite yet, or today, or anything like that. But what I will tell you is that even a 127% extension takes us right here to 132.50, which, by the way, is very key resistance, because that is horizontal resistance right here. Okay, so you see that horizontal resistance, 127% extension takes us to 132.40. That, I think, is achievable for today. And if you guys are a Forex Analytics subscriber, I did put on a pattern in play. You can see today, target of 133.50. All right. I don't want to give away everything there, but you can see that we're targeting a move up here now. All right. And it looks solid. Crude looks weak. Crude looks like it wants to break lower. With the dollar as firm as it is, I don't know if I would stand in the way here. All right. Now, where support is at this point is, well, for today at least, support's right here. By the way, you want to hear something very frustrating? I put in an order to buy the US dollar Japanese yen last night, or a US dollar Canadian last night. I put in a buy at 131.25. We went as low as 131.27. It missed my buy order by 2 pips. I crap you not. Yeah, that sucks. Yeah, yeah, well. And this, just so you guys can see, this is a flag pattern. I know some of you are like, but Blake, it's a double top. Well, not if it breaks out. So basically, if we break out, that flag takes us to 133. All right? So just keep that in mind. Support is 131.25. Looks pretty bullish, especially if we break this, break into the 90s, which we're 5 pips away from. All right? And we're going in back into a range. We were bearish, or no, I'm sorry. We were threatening to go bullish. We were in a range. We're threatening to go bullish. Okay, today, as we're breaking, almost into the 90s right now. Okay, all right. Let's go over to, and crude oil inventories are coming out today. By the way, everybody knows that that we're going to see a nice build based on the API data yesterday. Everybody knows we're going to see a good build today. Why's crude at lows right now? Riddle me that, Batman. Yep, fat man. Riddle me that, fat Batman. Batman who is fat. Batman who is fat man. Fat Batman. Riddle me that, fat Batman. I actually just like saying that now. Fat Batman. I'm overweight right now too. Just so you know. Fat Blake, fat man Blake, fat man Batman. Riddle me that, fat Blake Batman. Kevin says you definitely need more sleep, for sure, without a doubt, without a shadow of a doubt. I'm 15 pounds overweight. I should be 15 pounds, at least 15, if not 20 pounds lighter. That means Fat Man Blake needs to get on the Fat Man Batman treadmill and run my ass off is what I need to do. Okay, sorry, I'll continue on. All right, let's go over to the Kiwi. So the Kiwi, yesterday, 24 hours ago yesterday, we were here, and I said, hey, the Kiwi, probably a little oversold here, probably is going to be a nice sell, a nice short when you get to 72.90. Do you remember me drawing that red line yesterday? Well, we got to 72.90. I'd give it all the way up to 73 cents, but we basically went up to previous support, which is current resistance, and Batman did it again. All right, 73 cents should be good resistance today, even slightly above that. Fat man. By the way, whoops, we are now breaking down into the channel. So, because we broke this upward sloping trend line, we're probably heading back towards 70 cents, if not 69 cents. Okay? Support 72.30, but more important, 72. 0.7200 asterisk 0.7230. Okay. All right, fat man. Seriously. A, I need more sleep. B, I need to eat less grocery store deli chicken that's deep fried, because that's definitely not good for you. So the Aussie dollar broke through support, hit resistance, and pretty much acted like a good little currency should, right? This is pretty much as basic technical analysis as you can get. You know, again, you guys can look at all your MACDs and, you know, your wait, hold on, let me give you a list. You can look at all your where the hell am I? Oh, here, wait, I want to do study. You can look at all your, whoops, you can look at all your Keltner channels and Ichimoku clouds and rate of change and stochastics and true strength index and blah, 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 blah. Look, it just is really basic stuff. Support, resistance, pivot, right off of resistance. 75 cents is resistance. Support which is major right now, is at 74. This horizontal support right here, that horizontal support right there, this is major, major support today. Major, major, which that low right there is, that low right there is 74.07. So we're going to say 74.10 is major support. Wait, hold on. Do you think I think it's major? Wait, hold on. Do you think I think it's major? Oh, look at crude oil. It's so major. Because do you know how bullish people have been? The dollar, the Aussie dollar. People have been so bullish the Aussie dollar because it's going to break higher. It's got this double-headed inverse head and shoulder pattern. It's way oversold. It's going to reverse. It's going to, you know, we're basing. Yeah, we break through 74.10. They're all wrong. Every single one of them. Every single one of them. Batman. Batman. Let's take a look at crude oil. Sorry. Here's crude. I just like saying it. It's fun. Fun to say. Fat Batman. Wow. Look at the 5-minute chart. Oop. We just broke some support. Oop. Okay. Okay. Let's look at, what are we doing? What are we doing? Oh, we have to do the other ones. Dollar index. Dollar index. Here's the dollar index. We wrote down resistance yesterday at 95.60. Do you think that was important? Yeah, what's more important is this now, which is now 95.70. If 95.70 gives way, look the hell out. This thing is just going to squeeze. We're going to see a squeezola on the dollar indexola if we squeeze above that. Okay, we squeeze above this and we are going like this. I'm not saying we are, but I'm just saying if we break through that trend line, it's going to go. Support. It's not the 200 period moving average. It's just this spike low down here. We're at 95.40 for now. Oops. This is a range threatening to turn bearish. This is range. But you know what? If we can break this, I'll turn it bullish, just so we can bullish into the upper end of our channel, right? So it'll go bullish from here to here if we can break out. But not yet. It's still range for now. Oh, how about this one? How about this one? Oh, I'm sorry. You shorted the Mexican peso? Because it had that really bearish wick 2 days ago. I mean, look at that thing. Bearish. That was the biggest. I still thank God that I opted not to short the U.S. dollar Mexican peso 2 days ago. I sat there and looked at it I probably sat here for like 15 minutes at this desk in Asian trade. I was looking at that candle and I'm like, I've got to short it. I kept talking to myself like, I got to short this thing. I've got to. It makes sense. Why shouldn't I? I'm like, you know, the markets are probably going to rally back. They rally back, you know, it's going to push lower. And yeah, thank God I didn't, because this peso looks like it's angry. It does. So what we're noticing here, 786 right there. Okay, we break above 1921 and it's gonna squeeze. 1921. Break above that, it's squeezing. We are in a range. Support is at 1892, 1893, and I can imagine anybody who's short the U.S. dollar Mexican peso would be so freaking happy to see 1893 right now. If we saw 1893, you would have just a boatload of people covering up shorts if we see that. Because anybody who's short from a couple of days ago, all they've seen right now is this for the last 2 days, and they are probably very worried that they're never going to see that again. So if we can get down here to the breakout point, which is this yellow line right here, if we can get down to that breakout point, they are going to be so happy to cover up shorts. That's why if you want to be a buyer, you got to be a buyer down here, because that's where everybody else is going to be doing it. Cliff said I scalped the bearish candle on the peso and I got out. You scalped it? Where'd you get out? There's nowhere to get out. Good job. Cliff, it seems like to me you never lose money, which is, in my 20 plus years, I've never met anybody that never loses money. But you're pretty good. I give you that. All right, continuing on. U.S. dollar, Norwegian krona. Now, with crude oil doing its the safety dance, you know the safety dance. Those of you that are in the grew up in the 80s. I'm not going to sing it for you. As much as you want me to sing it for you, I'm not going to sing it for you. Watch this U.S. dollar, Norwegian krona. It's 829. So that's the 618, right? So what makes that even more important is if we break above that, if we break above those highs, this U.S. dollar Norwegian krona is going to go. So with crude oil a little heavy, that's looking quite possible. 829 is resistance today, and that's key. Support, I mean, we can just write down 820. Okay. Here's a Swedish krona. So we completed that inverted head and shoulder pattern. Done. All right. We've hit that level twice now, which makes it even more important, which means that above 853 makes it, or let's say 854, is going to bring out the squeezies. You don't want to bring out the squeezies. Well, maybe you don't want to bring out the squeezies, but the squeezies come out of the woodwork here. Now, if you think about the dollar index, you go back to the dollar and you go, okay, well, if the dollar breaks above that, my assumption is at that point is that the U.S. dollar Swedish krona is going to break above that resistance too. So 846 is still support. We're in a range right now. Hold on really quick. I'm chatting to the guys in the chat room. Okay. All right. Sorry, guys. I had to chat to the people in the chat room. Yes, Nigel. Correct. All right, guys. That your bias chart's done. Oh crap! Time's almost up. Actually, time is up. Time's almost up. I'm going to go through some questions in a bit when I come back. We do have import prices. I think that's being released right now. Yeah, we got import prices. We got to watch import prices because that's going to feed into some of our inflation data. You know, CPI and PPI in the coming reads ahead. So, yeah, obviously, if import prices, we're expecting a little bit of a decline, but if import prices start to fester a little bit, if it's starting to show a little increase of inflation, then it's going to start feeding into CPI and PPI, which obviously is going to feed into what the Fed's thinking for rates. So don't go anywhere. We might have a little bit of a market mover in the next few minutes. Don't go anywhere. Be back in 5.